Welcome. Your trade of the day is going to be about pattern recognition here today, and we're talking AMC mostly because of the opportunity afforded by looking at what happened in the past and being able to make a trade execution or set of executions based off of that. As always, higher time frame. I'm really just looking at a 60-minute, but I want it to be relatively clean. It's just a few sessions here, not really looking at more than just that last week, but I have a couple of lines set out for you guys. If you look at the biggest moves that have happened in AMC, and we're talking down here, and then we're talking this last push that we just saw a few days ago into 27. One of the things that's been in common with these moves is the action off of the open, which has led to some dip buys. But the good thing about those tops is it gave us some target areas here. You can see wick off tops to 27, 27 and a half, but then really volume highs at about 26, and this channel 25 lower high as well that held resistance, then big rejection of those levels. So as far as where we thought it could go this morning, 25 and 26, we're going to end up standing out there. And then I always sort of go back to once you make a bit of a bottom, and that's exactly what we saw yesterday. In the afternoon, late afternoon, we put in this top here at 23.85, and we're talking about that in the afternoon show, that 23.85, could it go, could it go? But the late support on that 60-minute candle here is right down around 23 and a quarter. So I came into here saying, if we are in this range, I like the long. If we are breaking out from this range, I like the long, and I know where my targets are going to be. But we've got to keep in mind the fact that it's been dip buying all the time. So I knew when we came in this morning and we're already at 24, when I logged in, it's like, okay, we're above that zone. I favor the long side of the trade. Getting in early, and this is actually at 7 a.m., we're longing 24s into the quarters. We're getting back in around 24, and what happens? It's like, oh, these moves are getting really shallow here. Scalps them out. Last load in is just after 9 o'clock. And at this point, I even think I even said it on the show, like as you're getting long in this last time, we got lower highs coming in and we're trending to the downside. It's been doing this dip at the open. Shouldn't take any more fills until the open to see how this one fleshes out. So we didn't take anything else in this little pocket here. In fact, got some out shallow, anticipating that you might see a bit of a dip. There's a couple of ways that this can end up playing out for you when you do this. You could just break down at the open and get stopped out looking for re-entry, or you can get rather fortunate in that line here, which didn't even challenge the 23.25 on our 60-minute, this line here at 23 and a half, it actually ends up reversing right on the pre-market low. When that happens, all you have to do is see it bounce off that level, take a long in front of it, and then you're back into the same trade as before. Always respecting where there were some sellers, to be able to get some out at the quarters and the 50s, and then it just became the pattern from the day that we launched to 27. If you were trading on this day, every single even and 50 break was a re-entry point. You'd hit it and it would be clean. And the end result was going all the way from 22 to 25 in one session. Now, didn't think that could repeat, but we definitely believed get back in once we break out pre-market high. Once we take out 25, we're getting back in. There's going to be one obvious misstep in this trade. I always like to go over where's the place that we went wrong. It's pretty simple to be able to see it. I just told you about the evens and the 50s. There's no re-entry back here at 25.50. Now, when you're engaging in a play the trend but get multiple entry points on breakouts, the whole point of scalping it out is that you're getting back in, either when it makes the break or if you're afforded to be able to get a dip buy alongside of the trend. Otherwise, you should just be holding on to a bigger portion of the position. So there was a mistake made here in that I did not catch that 25.50 break. Suddenly, I've got nothing else in the top end of the range except for what we have left with 25s. We watched it resist that 26 area, and that's where we came back to our concerns here. You had a wick off top the other day when it went parabolic at 27. The sellers re-engaged at 26 and took control from there. So on a lower high, with the market looking like it made a turn, it did make sense to get out at 26. Hindsight's always going to be 20/20. Was it a short from there? Yeah, it absolutely was. But bias was to the long side, structure was to the long side, multiple entry points, but also understanding we didn't want to get stopped out at the open. So it was important to hang back, allow it to dip, and then get the rip. Your trade of the day is always brought to you by Day Trade the World. Get started with your trading floor today. Check the QR code below.